I'm Brock Romanek, the driving force behind Zippy Point. Today, Kevin LaCroix joins us to talk about D&O insurance, an area for which he is known as the man. That's not only because he's been in the field for almost 40 years, wearing all sorts of different hats, but because he's been diligently blogging about the topic for nearly 15 years on the D&O Diary, a truly tremendous blog. But Kevin does have a day job. He's the guy you hire to help negotiate your coverage with a D&O insurance carrier. He's a lawyer. The D&O insurance stuff is legalese intensive, trust me. And he serves as Executive Vice President for RT ProExec, a division of RT Specialty. RT ProExec is an insurance intermediary focused exclusively on management liability issues. By the way, if you're new to D&O insurance, make sure you check out the right side of Kevin's blog. You'll see some nuts and bolts about D&O insurance today on Zippy Point. So, Kevin, what's the difference between D&O insurance and indemnification?
Well, they're both important, and for some reason, a lot more time gets spent talking about D&O insurance, but indemnification could wind up being much more important for an individual. You think about a D&O insurance policy, it's an annual contract, has to be renewed, subject to many terms and conditions, subject to exclusions, whereas indemnification obviously is available subject only to the constraints of the balance sheet of the company. But that's why you need D&O insurance, because the indemnification promise is only as strong as the balance sheet of the company making the promise. And in my experience, the indemnification question only becomes most critical when there's some type of a crisis. And often disputes can arise about whether a current or former director or officer are entitled to indemnification, whereas the D&O insurance contract is an enforceable contract. And the insurer doesn't have a dog in the fight, whatever it might be, so they're not going to withhold based on spite, anger, or other emotion. So the insurer is standing there with all the full balance sheet protection of the insurance company versus the balance sheet protection of the company providing the indemnification. Both are important, and both should be attended to and understood. But they each serve a slightly different role.
Do you find that most public companies indemnify their directors and senior officers?
They do. And in fact, even if there is not express indemnification, there are statutory and even equitable rights to indemnification, which, depending on the jurisdiction in which the company is domiciled, could also be available. The question I'm usually asked is not whether a company provides indemnification, but whether there's indemnification undertakings beyond those in the Articles of Incorporation or bylaws. For example, executives of many companies have separate written indemnification agreements that provide a great deal more process, plumbing, specification about how the indemnification is going to work in practice. And it's something that I actually recommend, especially for senior executives of publicly traded companies, that they consider reaching out to their company and seeing whether they could enter into a separate written indemnification agreement.
Do you see companies entering into individual indemnification agreements with each officer and director? Is that a common thing?
It is common for the company to have written indemnification agreements, particularly in Silicon Valley. It's actually part of the culture there, but also in other types of companies in other parts of the country. It isn't necessarily always with all of the directors and officers. Most frequently, it's the CEO and sometimes the CFO. And then if there are particularly wealthy or prominent individuals on the board, they may have separate written indemnification agreements as well. But it's something that I would suggest that executives of publicly traded companies certainly should discuss with their own personal legal advisors and think about it, whether it's something they want to approach their company about.
Great. Thanks very much.
Yeah.